Good afternoon, good morning, good evening, whichever part of the world you are in. Thank you for joining in. Welcome to the webinar on Buy Now, Pay Later and how it is reshaping the credit industry. On the panel today, I'm very pleased to have Chayan Hazra, who is the head of payments for Asia Pacific at Pine Labs. Pine Labs, as you would know, is a merchant platform that provides financing and develops software for point of sales or POS machines as we know it. The company has more than 70,000 retailers across India, Malaysia, and other parts of Asia. Putting it simply, if you have ever used a credit or a debit card in India, chances are that it was swiped on a Pine Labs POS machine. Chayan himself, he comes with 2 decades of experience in financial services and banking with a focus on payments in the Asian markets. He probably eats, drinks, and breathes payments, having done extensive work in areas such as payment processing, cards, merchant acquisition, digital wallets, and of course, BNPL. Chayan is also an angel investor and he helps fintechs and startups in scaling up. Welcome, Chayan.
Thank you, Nikhil.
Next, we have Kanaz. He is Vice President Products at Simple. Simple, as the name suggests, is trying to make the customer journey simple when it comes to payments. It has 15,000 plus merchants, 7 million users, and it empowers customers and merchants to have more control over their payments experience. Kanaz leads overall customer and merchant growth along with D2C products such as Pay in 3 and other strategic initiatives. Prior to Simple, Kanaz has held various leadership roles at Amazon and Mondelez International. He holds an MBA from IIM Ahmedabad and is a BTech in electronics and telecommunication. Welcome, Kanaz. Welcome to the webinar.
Thank you, Nikhil. Happy to be here and contributing today.
And last but not the least, Raheel Iqbal, Managing Partner at Codebase Technologies. Codebase is one of the world's fastest growing API banking solutions provider. It has helped launch several digital challenger and neobanks and has many financial propositions across the globe, across Middle East, Asia, UK, and Africa. Raheel himself has close to 2 decades of experience in banking, regulatory compliance, payments, cards, and platform integration. He works closely alongside C-suite and boards, and he's an influential speaker and a facilitator on various technology and business-related topics in banking. Welcome, a warm welcome to you, Raheel.
Thank you, Nikhil, and thank you all the panelists on joining us on this exciting webinar.
Perfect. And today I'm going to pick all your brains on something very interesting. Buy now, pay later, right? Now, of course, the pandemic propelled a new financing trend among consumers, which has paved the path for how financial inclusion is being seen, the potential to reimagine the way credit underwriting is done. And I think BNPL is especially becoming popular among the younger population who probably have lesser options when it comes to credit, and also among the online shoppers, given the whole convenience that BNPL provides. And of course, to make all this possible, there is a whole new ecosystem that has formed, which is supporting this trend. And our speakers today, they represent different stakeholders in the ecosystem, which I think gives us a very unique opportunity to understand how the business of BNPL actually works. So let's get this started. Let's start with a polling question up front, and see what the audience feels. According to you, what is the biggest driver that is reshaping the credit industry when it comes to fintechs? Real-time insights on customer data using advanced analytics. Is it lower compliance requirements, compared to the traditional large banks? Is it easy availability of capital, or is it new and relatively untapped customer segments that they can go after. Looks like the real-time insights on customer data is clear, winner over here. A close second, I can see customer segment. So let's give another 10 seconds for people to participate. This is great. So I think the real-time insights on customer using analytics, I think that clearly is coming out as one of the biggest drivers, and very rightly so, if I were to say. So let me start with giving a broad picture of what the BNPL space looks like. What is the opportunity here? I'm going to start sharing my screen. Just I hope you can see my screen. If you could give me a nod, if you can see my screen. Wonderful. All right. So what are we looking at here? Right? It's a huge opportunity that we're looking at in the BNPL space. The global transaction value is expected to be more than more than $500 billion by 2026. It has grown rapidly, of course, from a small base, but it's going to continue growing at a massive pace even in the future. And of course, several things have fallen into place for this growth to happen. I think for one, there is genuine demand for something like that. There is genuine need for something like that. Yes, you can avail of credit facility through other means like credit cards, but look, it's not very convenient, and it's definitely not very real time. Plus, bear in mind the credit card penetration when it comes to developing countries is fairly low, in single digits, in fact. So there is a definite need for a buy now, pay later offering from a consumer side. From a merchant side, BNPL increases the card value, reduces the number of people who will stop prematurely in their journey of buying a product, which could be because of lack of funds at that particular moment. And real-time credit, that's again a huge convenience which is driving BNPL for the merchant side. This is, of course, an opportunity that fintechs have made possible thanks to the use of alternate data. The real-time data analytics, as we just saw, is the biggest trend and the biggest driver. And of course, the use of technology, it has helped drive down costs of transaction, which in turn, all things put together make the BNPL proposition a very strong one. And of course, that has seen a very strong interest from the private equity and the venture capital side. I dare say that Q1 itself has seen $371 million poured into the BNPL companies, and probably 2022 could be a bumper year for BNPL companies. All right, so now few seconds on how does BNPL work. Right? A very simple example here. Right? Let's say there is a guard who works at a private security firm, wants to buy a new mobile. And normally, he would have to wait for till a time when he has saved enough money to buy a phone, or he would have to settle for maybe a basic phone. But now with BNPL, he can initiate the buy right away. So that's step number one: initiate the transaction initiated right away. The merchant sends this data and also redirects the customer to the BNPL provider, and the BNPL provider in turn uses alternate data, also things like repayment history that the buyer may have, does the underwriting and sends this details to the bank for disbursement. The bank disburses the loan based on the recommendation from the BNPL provider, minus of course the fees that are going to be charged. And that, of course, is one revenue stream for the bank and also one revenue stream for the BNPL provider. And the transaction is completed. Customer gets his phone, and over time, the customer makes periodic payments to the bank via the BNPL provider. And I think this, the whole, once the person starts doing the repayment, that becomes the repayment data for future or any forthcoming BNPL request that the person has. So this alternate data kind of starts building on. Of course, the financial data is there. In some countries, this is mandatory, but this alternate data starts in turn. It starts giving, maybe allowing the BNPL providers to go bigger in terms of transaction value. All right. So what are we seeing? What are the 4 key trends that we are seeing in this space? One, of course, it's BNPL is now starting to grow beyond products and getting into services. For example, people can vacation now, pay later. It's also getting into healthcare and insurance, food and mobility. So getting into the services space. Second, we see super apps. It's getting very big into the super app space. The super apps, what it does is payment behavior across multiple segments can be assessed, and that's going to, of course, help the credit assessment. We see a lot. Point number 3, we see a lot of collaboration happening between banks and tech companies and also card networks, who of course have installed base, and that's helping them propel the BNPL proposition much faster. And of course, open banking, it's a source of a lot of customer data in a secure manner, which means there is more data for better underwriting, better credit underwriting, and again, reduce risk for the entire ecosystem as a whole. Of course, we can't get blindsided by the challenges here with the hoopla that we have around BNPL. We have to remember that there are some customers who may not be it could lead to impulsive buying, and they may not be able to afford what they have purchased. So that's definitely one risk that maybe not now, but as time progresses, as the space becomes richer and larger, this could be something that we have to, as an ecosystem, we have to be aware of and start thinking of what we could do to mitigate it. Second challenge is the evolving technology and the cost associated with it. It's BNPL as a segment is evolving. There are new technologies coming in every single day. So yes, so it's not reached a stage where you can say, oh, this is what we need to invest in. So the innovation will have to continue. The third is, of course, regulations. It's going to impact a lot of people, a lot of merchants, and as this phenomenon grows, you're going to see that it's going to become a very systematically important space as such. So all this is leading into, in fact, the fourth one, which is things are getting crowded. There's a lot of competition. Everyone wants a small slice of the pie, which means the risk that you have in the system when it comes to are you willing to take additional risk to acquire that one more customer. That kind of risk starts becoming more and more real. Right now, maybe it's still a very growing market, you don't feel it, but as time passes, this can become very real. So yes, so these are the challenges that we see going forward. And talking about going forward, as we look ahead, what are the 4 things that would continue to dominate any and all BNPL discussions? Just spoke about regulation, just spoke about open banking, customer experience, again, a very important thing that we cannot not think about, what is driving the trend, which is customer experience. And of course, financial inclusion, thanks to BNPL's reach. This is something that is also going to be an important discussion point as we go forward in the future. I'm going to call upon Raheel. Raheel, would you want to take up a few of the next slides?
Sure, Nikhil. Thank you for the insights. Is my voice clear now?
Yes, please go ahead.
Okay, perfect. So, Nikhil, as you were basically mentioning about the trends, the challenges what the BNPL providers are currently facing in the market. But on the other side of the coin, BNPL has made its impact, has made its has made itself known in the market within the retail spend, and there are very positive metrics which we see, which are basically giving giving the foundation for the next maturity stage for this industry. We've seen an increase on the average volume or the spend at merchants who have adopted buy now, pay later propositions. We have also seen an acceptance from the merchants to move away or actually add upon at least a new payment option other than the traditional cards and the cash models. So 54% of the merchants who were basically given the opportunity opted for a BNPL payment option, even though there's a cost associated with the merchants primarily, but they still saw the value and they wanted to basically give the acceptance. And we have seen how the consumers have been reacting since the time of pandemic, right? Banking sector was not that upfront dealing with the credit issues during the pandemic. They were not ready to manage their credit underwriting processes on a digital format, and that's where the BNPL companies brought in an alternative solution for consumers to give them the credit required to continue with the trend. So those are key metrics which will define the future and will allow the BNPL market to become go into the maturity stage. We have a very positive outlook for the BNPL sector. Of course, there are big players like Apple who recently joined on this in this industry. So there is a confidence in the model. There is a focus now from the bigger boys and the bigger market players on how they can actually come and take this industry to the next level. Of course, when we start any new concept or any new proposition, it has its own challenges and it has its own the time frame for it to get its own acceptance in the market by both consumers and providers. So I think we have come up to that stage. It's well marketed now. People know about these things. People are talking about it, and as you mentioned, Gen Zs and the millennials being the key consumers of this product, that has been promoted well. And now I think that's the next steps for all the providers in this market to take it to the next level. So we are very positive on the outlook, even though there are negative news and there are certain challenges which providers are facing. But I think these are good for the market to basically get that change and the maturity in place. So a little bit about code-based technologies. What we are doing, we are helping challenger institutions, banks, traditional institutions become global digital neobanks, delivering digital propositions, including buy now, pay later. We have a combined team of 150 people who serve the digital finance and the technology development field across 3 regions. And we have seen a tremendous focus from traditional institutions looking at the BNPL market, and based on the success of the BNPL fintech providers, they are also now looking into how they can be part of that overall value chain. We feel that institutions like banks, payment processors, fintechs on a collaborative model will definitely take the market to the next level from their perspective. So we at Codebase are helping all such institutions within the value chain, be it a fintech, be it a BNPL provider or a bank or a payment processor, or even retail merchants, to actually adopt to this new concept, to create efficiencies within the existing process. There are a lot of room to improve when it comes to underwriting, when it comes to decision making, when it comes to customer experience. And that's where our focus is on how we can help existing BNPL providers as well as help new players coming into the market to add value in the overall landscape. We recently launched our white label BNPL solution as well, which allows any of the institutions to launch their BNPL service. And it basically focuses on creating a technology driven competency within these institutions. As we know, banks and other institutions have legacy platforms, and they're not that agile to basically come to the level of the likes of the BNPL fintech providers. So we're giving them the opportunity to basically upskill their technology landscape and be able to come and contribute in this market. So with our white label solution, they would be able to even coexist with their existing legacy platforms and be able to offer a much better experience to their customers, even if it requires partnership with existing BNPL providers, if it requires any integration with payment gateways and so forth. So the platform is robust enough to handle end-to-end solution or end-to-end servicing from origination to underwriting to cycle management as well. So that's the idea. We saw this as a big gap. Even with the fintech lenders today who are doing BNPL providers, a lot of these providers make their own custom platforms, and that basically hinders their access to market or go to market timing. Today, everything is about timing. Everything is about efficiency. How can you leverage certain things to basically fast track your market penetration? So hence our white label solution is targeted across all segments to help them actually overcome the regulatory challenges, which we are basically expecting changes in the regulatory landscape. How can you manage those regulatory changes? How can you go faster to the market? And the idea is that all the BNPL solution providers should be focusing on the actual business, which is their customers and their merchants, and leave the technology basically so that does not become a hindrance for them to go to do their business. So that's the overall objective why we launched a full-fledged white label BNPL solution in the market. To give you just a quick overview how the solution works, the customer journey is completely controlled by the BNPL provider, and they leverage on our workflow, our credit decisioning, credit data capturing in capabilities, be it a traditional credit bureau data, be it an alternative social metrics and social data being available in certain markets, be it telecom data as well. So we are able to help BNPL BNPL providers with this kind of a platform which removes their focus from the technology build and go towards the customer journey and managing the business efficiency, their profitability, their merchants, and the access, where we concentrate on providing them a one-stop solution across the life cycle. And the core processing engine comes within the whole overall solution, which can easily coexist with an existing bank's platform or can be used as an independent solution for a fintech provider as well. So it's a very modularized, decoupled option where we help all kind of players depending on their market and depending on their segments, they can easily utilize any of our components. As I was mentioning, who we are targeting, we're targeting banks, e-commerce platform for embedded finance. We are looking at finance companies who are non-banking institutions, retail merchants who are now getting into their own funded schemes, fintech providers like our esteemed guest today over here, as well as any other BNPL providers who basically want to enhance and utilize enterprise grade technology and get access to all the relevant regulatory compliance when it comes to certain mature markets as well. Just to sum it up, the solution and how we are supporting today's BNPL fintech and providers is faster time to market, lower cost overall, and we are actually partnering up with a lot of such providers where we are able to give them the access to the platform on a transactional model and a SaaS model, which would basically alleviate the capex cost of development from such BNPL providers. We are here on the long run, so to basically to allow continuous development and continuous support to future-proofing the technology aspect for such providers, while they basically look and manage the customer aspect of their business. So that's all in all how we are helping the industry get to the next level of maturity. And as you rightly said, change is the only constant part which is always changing, right? So, and we need to be with the market, be it regulatory changes. We expect heavy regulatory changes in mature markets like the UK, Australia already coming in, and the markets like the developing economies like Africa, Middle East, Asia Pacific. They will also follow the same suit in terms of regulatory changes. So we want to prepare the fintech providers and the BNPL providers to be able to address those regulatory challenges and be able to offer their customers a much enhanced customer experience. So that's from our side at Codebase.
Super, thank you. Again, I think it's a very interesting point, right? So the way the ecosystem is set up, and Raheel, you are one of those players within this ecosystem which are allowing fintechs and other banks to focus on what they do best, which is interact with the customers. So let's get let's get Chayan and Kanaz in the firing zone, if I may. So let's start with a basic question. What is BNPL? Is it really a new trend? I know we spoke about this being a new trend, but is it really a new trend, or is it been around for more time in different forms? Chayan?
Actually, it's as old as trade, I would say. So buy now and pay over a time existed. Some of the if you go down and dig history, what I have seen is right from 1500s, 1600s, we have seen this phenomena. Again, for different use cases, you'll have in 1500s, you will find that Italy kind of had the church actually kind of got a pawn shop set up for their own, because the pawn shop owners were charging too high interest rate. Then if you go to England in 1600, 1700th century, you will see pilgrims. And again, the church stepping in for pilgrims to, pay over the cost of the pilgrimage over, a year. If you go into 1800s, and as US was starting to, shape up as a major economy, you will see, things like swing machines, furniture, pianos, even painting, house paintings and things. And you will actually find, ads for those, right? It's not about, just written. You will actually find ads for those where companies are actually advertising. In fact, it's said that one of the companies which kind of, helped really push this whole BNPL forward was Singer, the swing machine. They were one of the most successful, not only in US, but also at that time, late 1800s, early 1900s in China. So interesting, tidbits of history if you go back. So it's not new. It's always been there. I would say what's new is the way it is being delivered now, the speed at it is delivered now, to the people it is being delivered now, and the whole integrated, the commerce approach on the shopping apps and things like those, which are being delivered on the tap to the consumers, which is different from what we have seen with traditional credit cards or traditional personal loans, which obviously come for a certain segment of customers in the population, have their own timelines on how fast you can get it, and obviously how you can use it and where you can use it. So yeah, to cut it short, no, it's been there. It's not new. It's just, it's been dressed up and presented in a very different way.
So interesting. I think we should be calling it BNPL reloaded or something. Like going
Version
the
3, whatever.
version. So let me get Kanaz in. Kanaz, some stats before I pose the question. So from 0 to 3% of the retail trade. It's 3% right now of the retail trade is done via BNPL. It's a big number if you think about it. The 3% whole retail trade now going on BNPL. So based on your experience, I know we spoke about trends and drivers slightly in a quick manner, but from what you are seeing from simple perspective, what is actually driving the growth?
Yeah, no, great question. I just wanted to add to what Chayan had to say about, this being a new wave of something that has existed for long, right? I'm sure a lot of people who are on the call today will kind of relate to this, that the local mom and pop store where we go to make our top up grocery purchase, almost everywhere in the world they accept buy now pay later, right? Which in Hindi is kal de dena, right? Or hisab or khata, right? So this is a concept that has definitely existed, and it's a concept that was built on the back of two fundamental philosophies. One is trust, right? Trust between the customer and the merchant. And the other is convenience, which is what both the customer is seeking, because you just want to make your top-up purchase and be done with it ASAP. And what the merchant is getting out of that customer trust is higher conversions, right? People buying more and more from the same merchant. So I think this philosophy of buy now, pay later, or whatever we want to call it, has existed for a really long period of time. And it has worn many different faces, right? Today, what we are seeing is a more tech-enabled, much better branded version of it that's also extremely scalable, right? So at Simple, what we are really trying to do with this pay later product is take that customer merchant trust that exists with my favorite mom and pop store, and enable that to be spread across retail, right, using technology. And we'll talk about what I mean by that later. But that's also the trend that we're seeing. I think with the pandemic, there are two fundamental things that have kind of accelerated, right? One is overall adoption of e-commerce and shopping online for more and more use cases, right? So people are shopping, for their daily needs, for their aspirational needs, and over the last 2 years, that's kind of become like a habit. People are more accustomed to doing it, right? And along with that, the other trend that has been happening for some time now, and pandemic has accelerated again, is the whole unbundling of e-commerce, right? Till about 2015, 2018, there were specific destinations people will go for shopping, right? Be it an Amazon or a Walmart or a Flipkart, right? What we are seeing fast, and the fact that Amazon is venturing into this is also a testament to it, is people are now shopping beyond Amazon, right? People are shopping with D2C brands. People are looking for very niche, almost custom experiences as they're shopping online, right? And these two trends are really driving the adoption and need for BNPL, because what BNPL is really enabling is convenience, right? And being able to manage your budget almost hassle-free, right? Which a credit card cannot do, because that's asynchronous, right? You have to get a credit card earlier on, and then you have to kind of plan it. So I think these two are the critical trends that are enabling the fast growth of BNPL. And the other more underlying piece is with Gen Z becoming such a large majority or large share of online e-commerce demographic, they are by nature digital first, right? They've built their kind of identities on the internet, and by that very nature, they're also extremely comfortable with digital first avatars of taking credit, right? And they're also very over indexed on needing super quick, super convenient ways of meeting their needs, right? And these two things kind of coming together very well for BNPL, right? And that's why even at Simple, what we're seeing is that a lot of our adopters and loyal customers are extremely kind of convenience seeking and new to credit, and in that young Gen Z, early millennial kind of demographic, right?
Perfect. So what I'm basically hearing is something that has existed, but it's in a completely new form and avatar, thanks to the real-time nature, and of course the technology enablement, which has made it more scalable, more convenient, and completely new cohorts which are digital first. So yeah, makes sense. And I think also the way, Kanaz, you putting it is about how it is allowing the mom and pop, or the direct to customer brands to maybe come at a level playing field when it comes to the bigger e-commerce players like Amazon or Flipkart. Yes, of course, Apple is also into the market, but I wouldn't call Apple mom and pop. But again, I think it's making it more level playing, right? Uh, Let me, of course, at the base of all of this is, how do you underwrite? How do you make sure that, you're underwriting the right business? So let me, I'm going to ask this question to all my panelists, starting maybe with Chayan. How is BNPL, and what is there anything different when it comes to the credit underwriting process? What kind of risks do you have, and are there any ways that financial institutions can actually mitigate these risks?
So, obviously BNPL providers look at a lot of alternate data because you are doing decisioning online, real time. It's like credit on the tap. Most of them don't use the bureau data. So obviously you don't, and given that you are targeting a segment of customers which may or may not have a bureau record. So obviously you end up, using a lot of alternate data, like, Rahil was mentioning. It could be, it could be what phone you use, where you from, which merchant you are, and things like those, obviously with, big, tech players coming in, you also have a lot of social behavior, online social behavioral data, which you can get access to. There are providers today which give you a lot of online social behavioral data, which you can get access to. Now, obviously, is it not risky? Obviously, it is risky. If you see the, loss rates of most of the BNPL players, at least in the Asia Pacific, is much higher than what the banks are doing. But again, the way they kind of control it is because the ticket sizes are small. You don't start with a large ticket size. You generally have a limited tenure. And part of it is that you collect, let's say, 25 to 30% upfront as a first payment installment, as soon as you give it. So technically, if it's $100, your exposure is not $100, but it's $75 or $70. One of the other things which participants do is, you make sure that most of them have a payment product like a credit card or a debit card linked from a collection perspective. So thereby, reducing the friction, as well as making sure that, there is, the customer has a way to pay the installments. So from all of that perspective, yes, there is a risk. Yes, there is risk, but I think the participants are controlling it well, at least as of now. And as more and more data comes in, and more and more alternate data are available, and as the industry matures, I'm sure the participants will figure out better way to, and more intelligent ways to underwrite, and more effective underwriting to reduce credit losses.
Rahil? I'm going to turn to you. What do you think, according what you are seeing, the anything about credit underwriting, what the risks are associated?
See, the credit underwriting, how banks used to do, that was a manual and a broken process, and the new providers are trying to come up with alternative solution to that. Yes, as rightly mentioned, that it is not the perfect risk model or a perfect underwriting model, but that's a start where the foundation has to be built, and because it is built on data, the data needs to be collected as well. We do get to know the negative side of those providers on the losses part, but we do not look at the flip side of the benefit which has reached certain merchants, certain customer segments, and they are very much has a will to pay, right? So underwriting, as we see it, is a combination of risk appetite of the lender. The bank tomorrow can start saying that, okay, we will give out credit cards to everyone, right? On basis of certain information. Credit bureau does help them, but it also restricts their market. Whereas the BNPL providers are trying to capture the unserved market who do not have access to the financials, the financing abilities of the financing products. And the market, as the market will grow, the bigger the market grows, the lower the losses would basically start coming in as a percentage. So the idea is to grow the market in a way so that to just like how we do it in insurance, right? So we try to underwrite the losses based on a bigger population. So here also in a BNPL environment, the moment we become that size, the automatically the percentage of losses will start shrinking automatically. But saying so, there are methods, there are ways to consume alternative data, as well as traditional data, as well as transactional data. The capability is there now. I think with all the technology infrastructure, the telecom providers, the ISPs, the cloud providers, everyone has enough data to start utilizing it and start creating those trends and creating those the models, the ML models, which will basically help come up with a complete new or an enhanced risk model for sure for the market. So what we try to create an awareness within our customer segments as well, that it's not that you will be taking an open risk on this thing. There are ways to curtail that risk. There are ways to manage and be efficient within that risk model. But yes, it's a new risk model, and people will enhance it. Once you start doing it, you will automatically get more information on how you want to tweak your risk models, tweak your credit underwriting procedures, and the platform should be flexible enough to basically to support that change.
Makes sense. I'm going to pose the same question to you as well. How are you seeing the credit underwriting different when it comes to BNPL?
No, I think I concur with what Raheel and Chayan had to say. I'll just add one key thing. I think compared to traditional underwriting for credit cards and banks, one thing that has definitely changed is that now underwriting is very real time and self-learning, right? With the adoption of artificial intelligence and machine learning, we are able to quickly learn lookalike kind of models and figure out certain types of behaviors are less risky versus certain other types of behavior. Whereas earlier on, it was very heuristic based, right? Like you would just do KYC and you'll just look at your income statement and say, is this guy worthy or unworthy? But that is very quickly turning to be real-time self-learning and almost kind of getting more people in who you could never have gotten in with traditional kind of ways of doing underwriting, just because we are able to look at all of these alternate data points, transactional behavior, and because we've seen people somewhat similar to that, but with credit history before, right? And hence we know, if this guy were to ever have credit history, this is how he or she would have behaved. So I think that's kind of one of the key things that's changing within underwriting now.
Understood. So, if I were to then summarize it, saying it's, the risk per se in the system is not going up because, as a system, you are not, giving out loans, or you're not giving out credit to people who are, who don't have the ability to pay, but you're simply expanding the pie, you're making the cost lower so that the whole BNPL stays profitable at a much lower cost. I think, it's a very interesting takeaway because, there is a sense that, by using BNPL more and more, is there increased risk in the whole system. But from what I'm hearing, it's not about increased risk, but it's about increasing the overall pie. So thank you for that. I think this was something that I definitely am taking away from this conversation. Again, sticking to you, Kanaz, do you really think that this will impact people's scores, in any negative manner, the credit scores and things like that?
Yeah, so I think awareness of what BNPL is and what it is not in the consumer's mind is fast evolving, right? And it's somewhat complicated by the fact that there are really two types of BNPL providers. There is one type of provider which is basically a credit card like loan provider, which is packaged as pay later, much more closely integrated, who in turn does impact the customer's credit score. And there are cases where there's a bank actually taking a loan on behalf of the customer, even though the customer is not really asked for a loan, right? So there is that kind of BNPL, and then there is the more non-loan type of BNPL, which is what Simple is like, where we don't actually take a loan and we don't actually impact your credit score, but we are underwriting just purely basis, your transactional history and what kind of behavior you have shown across the network that we have, right? Tens of thousands of merchants. Now it's very hard to kind of create that distinction in the mind of the consumer, because all of this is now being packaged, at least in the external media, as BNPL, right? So it's a nuanced thing, and even within Simple, we are figuring out what's the right carrot versus stick approach to driving the right behavior, right? But at least we are very clear that the traditional way of driving the right behavior, which is penalizing your credit score, is like the last resort that we want to kind of go to, right? I think there are a lot more levers now available with this whole real-time underwriting and far more frequent touch points with the customer, that you're really able to influence the right action from the consumer, right? While of course building out the right filters at the top of the funnel to ensure that the intentional fraudulent people don't have access to the product. So, long story short, I think customers still haven't figured it out, and for the right reason, because it's a complex thing and there are different variations of this in the market, that it's very hard for consumers to identify what is a Simple versus what is somebody else who takes a loan. And that's a problem that we are very actively working on solving, without diluting our value proposition. And when I say us, I'm sure it is applicable to everybody else in the market as well.
Makes sense. Like you said, right? It has to be a balancing act. You cannot go to the extreme of having an impact on person's credit score right at the beginning. But yeah, makes sense what you're saying. I'm just looking through the question and answers that our people have asked. There's going to be one question I'm going to put the panel. Very topical. Apple Pay Later has launched recently. Our audience wants to know what could be the impact. I let my panel think about it for maybe a few seconds. I'll take a poll in between, and then I will come back with this question to any one of the panel members who would want to answer. So let's take one whole question quickly. Right. So in your opinion, what is the best way for banks to enter the BNPL space right now? Do you want to focus on acquiring customers organically or collaborate with existing pure pay BNPL fintechs, collaborate with big tech companies like Google, Amazon, maybe Apple, or the fourth type of collaboration is card networks, Visa and MasterCard. So what in your opinion would be the best way for banks to enter this space? Let's give people a few more seconds to answer. And I can very clearly see that collaborating with pure play BNPL fintechs is, according to our audience, the best way to enter the market. So I'm going to end the poll. There you go. I think it's an overwhelming majority of people believe that collaboration with fintechs, there is a lot of room for collaboration between BNPL fintechs and banks. I think coming back, right, gentlemen. So we do have this question: what do you see the impact of Apple coming into the Apple Pay Later scheme of things? Who would want to take that question?
I can go first. I think I think we are very excited by the fact that a lot more people are kind of focusing on convenience and using BNPL to make trust and convenience more real time between the merchant and the user, right? And with a player like Apple coming in, I think it only does wonders for this whole segment. But having said that, I think this is definitely not a market that is one player takes all, right? Because there are multiple types of use cases, both from a consumer perspective as well as from a merchant perspective. And one of those use cases that excites us a lot is how do you leverage a payment mode like pay later to really create value across the customer purchase funnel that the merchant is owning, right from creating awareness for the product to growing consideration to actually conversion and then payment. With players like Klarna, what we are trying to do at Simple, we are focused on that use case, which is to work very closely with merchants and enable them to grow their business overall, right? And not just be a payment mode at the last leg of the race. Not to say that there's no value there, right? Like, that's the value that players like Apple are seeing and are coming in and encouraging that. But I feel like, somebody like an Apple will be able to disrupt that space at scale, right? Which is offer pay later to a wide array of merchants and consumers and get that kind of, accelerate that behavior change that's already happening across both merchants and consumers. But the kind of use cases that we are going after might not be to what Apple is trying to do. So I do feel like there are multiple kind of.
I hear that there is enough opportunity for everyone to grow at this point of time. I'm going to bring you in, Chayan. So staying on big techs, right? What do you think? How well are the big tech like Amazon, Google, and maybe the credit card network companies like Visa and MasterCard? How are they placed? When it comes to fintechs and also when it comes to banks, who are the more traditionalists. I'm calling fintech traditionalists in many ways because they're already entrenched in the BNPL space, right? So how do you see that comparison?
So, everybody has their role in the ecosystem, right? So when a big tech company comes and, as Kanaz was mentioning rightly, they help to grow the overall ecosystem. They help to create awareness. They help to make it more ubiquitous. because of their sheer size of and what they can do and what they can and how they can influence the ecosystem. At the same time, as Kanaz mentioned, that there are different use cases. It's not about technology which can come over the air and it's becomes a two-player kind of a duopoly for the world. Every region, every market has a different flavor. So, everybody has a role. Now, if you take the classic example of the whole Apple Pay launch, right? Pay later launch. Apple as a consumer universe, which Apple brings in. Apple brings its technology. Apple brings in consumer onboarding, frictionless checkout experience, and obviously the scale. At the same time, you must have read that Mastercard is playing the role, working with Apple on this, whereby they make sure that they provide the backend rails to kind of run this whole BNPL program. Obviously, what exactly they are doing with Apple, Mastercard can share. But obviously, they do bring in that rails, backend rails, where using which Apple is able to deliver the product. At the same time, Goldman Sachs is actually owning the book. So if you have read the fine print, the book is actually owned by Goldman Sachs. Now, here you see three people or three big companies working in the same ecosystem for the same product, but have a very cutout role for each of them. So I think everybody has a role to play. And even on Apple Pay Later, you will see they adopting. So in US, they are trying to do it themselves, and with Goldman Sachs owning the book. But my take on this is that you will see them collaborating with companies like Simple and other companies in different geographies who are able to come up with different use cases and different customer segments, because they can't do it all. What they are trying to do is they are trying to create an ecosystem for and a frictionless checkout for the consumers, which they will be able to do. But can they underwrite everybody in the world? The answer is no.
Makes sense. Makes sense. I love the camaraderie already going on with my panel members. That's really good to know. And of course, no discussion can be complete without talking about the regulations, especially when it comes to credit. I'm going to bring you in. You touched upon it earlier. You touched upon the regulation bit, how that's going to increase. So, what could happen if you really were to use the crystal ball and tell us where could regulations become more important going forward?
So you're,
maybe Raheel, you could go first, and then Chayan could be.
Nikhil, can you just repeat the question?
So as I said, no discussion is complete without how regulations could shape. You spoke about how things are already shaping up in Australia and UK. So where do you see regulations, and then in actually helping BNPL grow?
See, regulations, the concept of the regulatory bodies in these mature markets is to protect consumers, and that's their primary role, to ensure that there is no activities which may harm the consumer confidence in the market, and as well as to protect the financial institutions from such kind of a loss incident or an event happening at a larger scale. But saying so, there are certain components of the BNPL service which requires it to be in a framework for it to allow the growth, right? And that growth has been seen. With regulations coming in, there will be some sort of a impact in terms of cutting out certain aspects of how we do business. But this change will allow BNPL providers to become much more mature and be able to service a market with a lower risk profile. That's the positive part of it. Yes, the regulators will try to pin it as how they've been between fintechs and versus banks, credit card underwriting versus BNPL underwriting. But I think they will still give the flexibility or a bit of leverage to the BNPL providers uh, to be able to fast track their growth aspect. And if they're able to showcase that model of risk appetite and risk undertaking, and be able to service the customer, uh, and to protect the customer's interest, I think they should be able to manage the change. However, from an onset, whenever there's a new regulation, there is always a negativity within the industry. But I think industry always overcomes that challenge, and the institutions automatically adapt, and whatever is in the market conditions, it automatically helps the overall industry to grow together. And probably the regulation may help BNPL providers restrict certain things, or be able to put up a model where they are able to convince the customers that you should be responsible enough to utilize the service and not misuse it. So it definitely will help both the sides, both the consumers as well as the fintech providers. And I think a gradual regulations, or a gradual or an incremental regulation is the right approach, rather than 0 or 100.
Makes sense. Chen, you had a point.
So, taking from where Rahil left, yes, the right word to put it actually is incremental regulation. And we are seeing noises across the world, starting from Australia to US to UK, Singapore, closer to home where I am based, Malaysia. All the regulators are talking, but at the same time, Singapore last year said that it's too small right now from an overall credit perspective in the market to bother right now. And as time comes and it becomes of any significance, we will see what needs to be done. At the same time, we have seen in Malaysia, at least, the regulator clearly saying that there is a need to kind of put a framework to it, so that it's a level playing field from a lending perspective for banks as well as fintechs, because today the BNPL providers are able to lend on the go, whereas banks have a different set of criteria to follow. I think the overwhelming concern of regulators has been the overall household debt. And making sure that especially people who are below a certain income category, the overall household debt does not increase, because you are not reporting to bureau, you're not looking at bureau scores, you're not looking at the overall debt. For example, in Malaysia, the banks, even have for a $1 loan, have to look at the overall household debt. So having said that, I think, yes, as Rahil obviously mentioned, it becomes more mainstream. As regulation comes in, people who are sitting on the fence and who don't want or apprehensive of BNPL, maybe they start believing when the regulator steps in. I saw a question in our question answer session is, what's the recourse of a BNPL? Like today on a credit card, I have a recourse with the bank. If the bank doesn't respond, most of the clearances, I can go to the regulator and complain. So what's the recourse for a BNPL? I don't have today. So all those gets kind of put in a framework for everybody, and rightly so, that it should have a framework which is transparent, which is same for both financial institutions and the bank, and which is answerable to overall ecosystem.
Perfect. I think what I'm hearing is making sure that the regulations are brought in gradually. It's going to ensure that there is no knee-jerk change in the short-term growth, but overall regulations will only help the long-term maturity and long-term growth of the NPL segment. So perfect. I think it completely makes sense. With that, gentlemen, I think we're already 4 minutes over from what the time we had scheduled, but it's been a very fascinating discussion. Completely taking away, there are lots of things that I'm taking away, but for sure I'm taking away the fact that BNPL is going to be one of the fastest growing trend in the payment segment, the lending segment. and it's a phenomenon that's going to continue in the next 4-5 years at least. Ample room for everyone. Perfect. With that, thank you so much. Have a great evening.